Part 1, the loaded plan. Popular in the 1990s and mid-2000s, these plans were geared toward both low deductibles and low copays for the policyholder. When people got these plans at work, they were wonderful. The employer paid most of the premium, and the employee had great coverage. Buying a plan like this today on your own, outside of work, is a major financial commitment. In this short video, we'll break down what the coverage looks like and what type of premiums you can expect to pay. The top section will represent how deductibles and coinsurance work for the consumer at hospitals and outpatient facilities. The bottom section represents how doctor visits and prescriptions work for the consumer on a day-to-day basis. Deductibles. Deductibles are generally very low with a loaded plan, $250, $500, or $1,000. And the most that you'll see is maybe 2 deductibles annually per policy. Coinsurance, this is the second portion where you need to pay, is also low. You'll see splits at 90-10 and 80-20. The 10 and 20% is the amount that you will pay, and usually the most it adds up to is maybe another $1,000. And again, this is only 2 times per year, so your out-of-pocket is really, really limited here, and it's low. At that point on a loaded plan, you go to 100% coverage, where the coverage is comprehensive, it's high quality, there's few limits, and expectations are met. When people have loaded plans, there's generally not any situations where people get upset or angry that their coverage is not doing what it's supposed to do. And people are usually quite satisfied with a loaded plan. The day-to-day portion, of course, is what's done outside of a hospital or an outpatient facility. And we'll look at doctor visit copays first. On a loaded plan, these are usually quite low, maybe $10, $15, $20, or $25. 2 key things here: they're unlimited in number, and they're going to be unlimited in scope. So it doesn't matter how many times you need to use that copay in a given year, it's always valid, as well as the reason you're using it is also a valid point. It does not really matter what you're going in for, whether it be sickness or preventative, mammogram, that sort of thing. A prescription card on a loaded plan is also good quality coverage with low copays. Maybe it's $10 generic copay for a generic medication and $25 for a brand name medication. They're usually quite simple to understand. These plans, though, are very, very expensive. These are usually done through work throughout the years. Like I said, in the 90s and mid-2000s, these were very inexpensive, but they've gotten a lot more expensive now. We'll just do a normal middle range plan here with maybe a $500 deductible and 80-20 coinsurance is generally about $1,000 a month. What's interesting is the top portion will cost around $500 and the bottom portion will cost around $500 as well. So you can really see where you're spending your money and where you're getting your value. So this is the basis for which we'll compare the other 2 plans, the balanced and the simple, and we'll compare them across the graph to a loaded plan and we'll see what the differences are.